everyone, a very warm welcome. You've tuned into Buy Now, Sell Now, the weekend edition. I'm Mubina Kapasi.
Hi everyone, welcome to the show. I'm Avan Dabash and we've got lots lined up. Over the next 30 minutes, we'll be focusing on all your queries and portfolio. Well, here's what's on the show today. We've got some queries lined up. We'll be talking about some mid-cap names, Excel Industries, as well as Camlin Fan Sciences.
And on our portfolio segment, we'll be discussing A. Kalaishwami's portfolio on the show.
Okay, time to introduce our guests and let's tell you who's lined up with us. We've got Gaurang Shah, VP GEOJIT BNP Paribas Financial Services. He's assisting us on the fundamentals, while Thakkar, Senior Technical Analyst at ShareKhan, joins us to give us the technical views. Thanks, gentlemen, for joining in. Well, first up, we've got a caller with us with a question on Excel Industries, and we've got Mr. Narayan, who is on the phone line with us from Mysore. Welcome to the show, Mr. Narayan. Thank you for joining in on Buy Now, Sell Now, the weekend edition. Tell us, what's your query?
I have 100 shares of Excel Industries at 283. I would like to know if I can hold this or sell this off.
Okay, 283 is the buy point of Excel Industries. Not a stock that we refer to very often, not a very liquid name in the markets, but let's get in a view then, Gaurang. What's the opinion when it comes to the fundamental side after having a look at the stock and the kind of buy price? Do you think that it merits a hold in the portfolio, that there are other mid caps that you can look at?
Well, Aman, thanks for that. And again, it's not a very liquid counter like you mentioned. And my sense is that if the investor wants to take money off the table and invest it, or rather reinvest it anywhere else, our belief is that the consumer durable and the GST rollout is going to play a significant amount of positive impact on the ceramic tiles and the sanitary ware companies. With that perspective, I think it is prudent to make a shift to HSIL. As a disclosure, we do have a positive coverage. A very conservative target near term is about 390. If the GST has to roll out on 1st April 2017, and the impact of it being positive on the industry, and of course the earnings visibility, which has of course improved with the kind of policy decisions that the government has taken, our sense is that HSIL would be one of the beneficiaries of the policies as well as GST rollout. So prudent to make a shift in case if he wants to.
Okay, Gaurang's advising that you may move out of this stock. It's a very illiquid stock, as we did flag off earlier. Just to tell you a bit about Excel Industries, it is one of India's first chemical-based companies, or chemical manufacturers rather, and it manufactures specialty polymer additives, also a lot of veterinary APIs. But Jay, come in on the technicals then. It's a sell call coming in on the fundamentals, but what's your own opinion on how this stock is expected to move?
Well, absolutely. I agree with what Gaurang said. In this kind of, a bit of illiquid stocks, it's better to be out of it and get into those kind of stocks wherein we have, good liquidity, good volume coming on, and the rate of change of volume basically, increases at least quarter on quarter. These stocks, you see a upward journey or upward movement in any kind of stocks, wherein you see not only the price action or the price higher tops and higher bottom, but along with that you also see the higher tops and higher bottom on the volumes, or else the volumes rate of change indicator. So this is not that kind of a stock wherein we could rely much on the rate of change indicator, and hence I would like to say that if he has a profit in this kind of a stock, then he should book definitely and get into those stocks which are highly liquid and reliable, and their moves are also quite reliable. So there are few stocks I think in the market as of now in the mid cap side wherein we are seeing enough good liquidity. So I think it's better to exit from this kind of a stock and get into some better liquid stock.
That's the advice coming in on the fundamentals as well as the technicals on Excel Industries. But Narayan has got another query that's coming in on Camlin Fine Sciences. So Narayan, what's your question?
I have Camlin Fine Sciences bought at 150 shares. I would like to know if I can hold it or sell it off.
Okay, let's get in the call then on the company. Remember, the sector has been a buzz, specialty chemicals as well. We've been talking about how a lot of big market men have been viewing this sector in terms of the kind of growth that it's seen. It's valued at a whopping $25 billion. A lot of the stocks within this space have delivered two-digit growth in the last 5 years. Traders are viewing this as one of the next mega trends as well. So, Gaurang, is there upside potential in Camlin Fine Sciences?
Well, I think even if it is, it's going to be quite limited, and you have seen the stock languish in a range, and the trend is on the downside. Our sense is that from a long-term point of view, if you have to take benefit of one of the sector and stock which has corrected very recently, and if you want to invest this money from a long-term point of view with outlook of turnaround, commercial vehicle sector is something that we are quite optimistic on. And within this space, the stock which has been in news very recently for the merger that it did of Hinduja Foundries is Ashok Leyland. I think 80-82 levels is a very strong delivery based buy zone for this particular counter. The month-on-month numbers were not very encouraging, and so was the disappointment in terms of the last earnings season that we saw. But everything on the negative side, including the merger of Hinduja Foundries, is in the price right now. And from current levels of 80-82, your downside is extremely protected. This is also going to be one of the beneficiaries of the huge uptick that we are going to see in terms of MHCV offtake, including LCV offtake, and of course the phasing out of old commercial vehicles or scrapping of old commercial vehicles of 10 and 15 years and beyond. GST rollout is also going to play positive in terms of the logistics sector outlook, and thereby having a demand on the uptake as far as the fleet owners are concerned. Defense supply is also a huge big trigger for this particular company. They supply armored vehicles. And export market, I was listening into the commentary from the management. They very recently bagged some very large orders from the overseas market, and this run rate is only going to improve going forward from here on. Considering all these positive tailwind and a very restrictive or a lesser headwind possibility from current levels, I think Ashok Leyland would be a preferred shift with a target of 115, again a very conservative target. If earnings turn around and if the environment becomes more conducive, we will definitely review the target upwards.
All right, that's Gaurang's call coming in. Then you may actually sell off Camlin Fine Sciences and look for a commercial vehicle player, Ashok Leyland, on the back of a turnaround that he expects will take place in that stock. But Jay, come in on Camlin Fine Sciences. Like Gaurang said, it's more or less been of a range-bound stock and with a downward momentum. What's your expectation?
Absolutely, this stock has been trading in a downward sloping channel since couple of weeks now, and we are continuously seeing low tops and low bottom formation on this stock. The indicators are definitely into the sell mode, so that is a clear indication that the stock is in a downtrend with low tops and low bottoms, and a sell crossover is momentum indicators. So even I would say that one can avoid this stock, or buying fresh into this stock, or if someone is holding, then I think it's better to be avoid or get out of this stock and get into some good upward momentum stocks. Rather, this stock has a good resistance at around 95 to 100 zone. Until those levels are not taken off, I would not see any pickup in momentum, at least as far as 100 levels are confirmed. Those are the very crucial resistance levels. I think the best strategy as far as Camlin Fine Sciences is concerned is to exit from this stock and get into some good upward momentum stocks. And there are many in auto ancillary space like JBMA you have, and then Bharat Forge you have. So I think these are the stocks which are really into good momentum since last couple of weeks now.
What is 430? Okay, that's a view coming in on Camlin Fine Sciences on the technicals as well. Hope we answered both your stock queries. On that note, we take a quick break right here on the show. Up ahead, we discuss a Kalaichame's portfolio on the show.
staying on with us. This is Buy Now, Sell Now Weekend.
Well, we've got our portfolio advisor segment lined up. Let's take it straight then to the profile of our viewer. Kalaichami has sent in this portfolio, 49 years of age, from Tamil Nadu. He's an investor by occupation and with a time horizon of the next 6 to 9 months, which is fairly short term, wants to know what exactly he should do. First up, he's got Ashok Leyland in the portfolio at 87.2. Force Motors, just 10 shares, picked up at 3,400 levels. Akataya Cement has been picked up, 21 shares at 387. There's Balaji Mines, 50 shares bought at a level of 209 rupees. Some more mid-caps, 8K Miles, 2186 is where he's purchased about 12 shares. He's also got Delta Corp in the portfolio, 250 shares bought at 142 rupees. Meantime, ITD Cement features on the list, 128 is where he's fetched close to 300 shares. Manappuram Finance next up, 350 shares bought at about 65 rupees. Quality is what he holds in the portfolio at 120. Bharat Forge, 772 is where he's purchased it. There's Opto Circuits as well at 11 rupees and Wellspun India, 125 shares bought at 65. Let's get in a call then, Gaurang, on the first three names in the portfolio. Ashok Leyland, you seem to really favor this stock. What's the outlook at his buy price? Force Motors, what's the word here? And what do you believe he should do with Kakatya Cement?
So, Aman, first of all, I think he needs to keep in mind that you don't need to have such a huge diversification into 12 stocks that he's got. You should always keep your portfolio small and tidy and neat. And if you look at the portfolio, all his holdings is into the broader markets, mid cap and small cap universe, that is. So, first of all, just see to it that you bring down the number of stocks in your portfolio, because wide diversification is not necessary in point of times, and when you do that, only when you don't know what you're doing. So please bear this thing in mind. I would like to advise to all your viewers that in investing in equity market, if you have a limited capital, please don't spread your investment into various sectors and have a lot of stocks in your portfolio. Keep your portfolio slim and trim. On the first investment, Ashok Leyland, as I have already just said, quite optimistic. I have reasoned out our optimism and positivity, and with all the negativities in the price, I don't think 80, 82 is going to be breached anytime sooner, and you're going to see a far deeper level than that. There is delivery based buying seen on the counter at these levels. Uptick in terms of commercial vehicle offtake, defense supply, overseas supply, phasing out of commercial vehicles in the 5-10 years is going to add to positivities of this company. And of course, the recent news on the merger of foundry business into Ashok Leyland will have a negative impact in the short term, but long term is going to be incremental positive. So we have a target of 115, and it would be prudent if we can offload some of the very small, lesser known names and go on adding to Ashok Leyland. His acquisition price is 87 or thereabouts. At 80, 82, I think it's definitely advisable to average over here. On Force Motors, our view is that Tata Motors would be a preferred stock. My sense is that with the turnaround in the JLR and domestic business, with new manufacturing facilities, Tata Motors could be the one wherein you would tend to get rather more return on your capital. Force Motors has already rallied in the last year and a half to the levels where it has, and he's actually bought it at 3,400. So your scope of making profit incrementally becomes much more smaller at this elevated level. So make a shift to Tata Motors. On Kakatya Cement, well, we like cement as a play, but it is very prudent to look at what companies you are buying. You should look at companies which have got manufacturing facilities spread pan-India, very strong distribution and dealer network, and a great market share. And with that perspective, my view is that you could make a shift to ACC.
All right. So first of all, Gaurang advises that you need not really put all of your money into only the mid-cap and small-cap sectors as our viewer has done at this point of time. And you actually may replace out Force Motors with another large-cap company, Tata Motors, and Kakatya Cement can be replaced with ACC Cement. Let's move on and get in the next three stocks in his portfolio. Once again, it's a list of small cap names over there. Balaji Mines, he's bought in at a price of 209 rupees, making some good amount of money over there. 8K Miles at 2,186 rupees, which is a pain point for him. And lastly, Delta Corp at 142 rupees. Gaurang, getting a check on these three stocks?
So on Balaji Mines, make a shift to Axis Bank. We have a positive coverage, looks quite promising. We have been maintaining a positive coverage since long, and private sector banking is something that we believe will definitely outperform in years to come, as it has in the past 2-3 years. It is one of the leading private sector banks, and we believe that interest rates is likely to see a lower trajectory, possibly another rate cut by December 2016, and maybe by early Jan-Feb March 2017. If inflation doesn't have to prop up its ugly head, you could see another rate cut coming through. Loan book offtake is likely to see positive traction, both in terms of corporate as well as retail, and consumer loan is also likely to grow to a great extent. So Axis Bank would be a preferred shift. From 8k miles, go and buy into a TCS. All the negativities and the statements and commentaries from the management in terms of profit warning is priced in at 2300 levels. The stock has been consolidating, has seen some delivery based buying coming in. We have a positive view on TCS with a target of 2650 from a long term point of view, 1 year plus. And on Delta Corp, well, our preference would be to look at a mid-cap name, KC International in the cap goods engineering and electrical transmission equipment supply. We believe that this is one company which has got a very decent order book. Execution is also par excellence, and in days to come by, the order book is likely only to grow, and thereby execution is going to improve, and thereby it will translate into a lot of positivities in terms of top line and bottom line. A conservative target of 165 on KC International.
That's the view coming in. 3 new recommendations in the portfolio, perhaps a little bit of inclusion of marquee large cap names. Moving on, ITD Cementation bought at 128. Are you convinced by the prospects here? What's the call on Manappuram? And quality has been in focus of late at 120. Do you like the stock?
So again, we would have a shift, and I'm afraid to say that I'm recommending quite a lot of chops and churns in his portfolio. Of course, he can consult his individual financial advisor and take a view. This is just a recommendation from my side. Our view is that Ashok Leyland, which he already has in his portfolio, could be added by selling of ITD Cementation. On Manappuram, again, we would prefer a name like Dish TV. It is one of the largest DTH segment company. Acquisition of Videocon D2H would bring in more traction and positivity. Digitization process to be largely completed by December 2016 will add to positivity, and of course it has got one of the niche products called digital HD set-top box, which is seeing traction in terms of metros, Tier 1, Tier 2 cities. In terms of numbers, they've seen incremental amount of improvement. We have a target of 116 on Dish TV from a long-term point of view. On quality, well, there are a lot of players in this field, and our sense is that too many cooks spoil the broth, and a shift to Aurobindo Pharma would be recommended. On Aurobindo, we have a target of somewhere close to about 980, again from a long-term point of view.
Okay, all 3 stocks were actually sell calls coming in, and replace them with more of Ashok Leyland, Dish TV and Aurobindo Pharma. But Gaurang, getting a check on the next 3 stocks. It's Bharat Forge at 772, Opto Circuits at 11 rupees, and Wellspan India bought in at about 65 rupees. What is your take on these 3 stocks?
So Bharat Forge, we are quite positive. All those negativities of Europe Class 8 truck from the US orders coming down, etc., has been done and dusted. Numbers were disappointing. I don't think that kind of disappointment you're going to see. And the fact of the matter is, when the numbers were unfolded for Bharat Forge for the last quarter gone by, the stock actually recovered and closed the day at a higher level. We're quite optimistic on the uptick as far as Class 8 truck orders are concerned from the US. Domestic market is a huge opportunity, and of course equally robust is the replacement market. We have a target of 980 on Bharat Forge. Stay invested. Opto Circuit, I would again repeat, add to Ashok Leyland, because I'm quite optimistic that Ashok Leyland will do well. And of course you need to trim down the size as far as the number of scripts that you have in your portfolio. On Wellspan India, too much of dust flying around with all those negativities in terms of Egyptian cotton products not being sold, various large clients of Wellspan pulling back their order. Well, we've seen a lot of negativity and downside. Don't be in a hurry to sell the stock off. You got it at 65. I think if the company is able to sort out the issues in a very appropriate manner and not damaging the credibility, you are going to see a turnaround. As of now, hold on to it. Long term, very long term target of 110 is what we have.
There you have it. Gaurang has given all of his recommendations. He has analyzed your portfolio and advised quite a few stocks that you can replace the old ones with. Thanks very much for that. And do remember that this is only a model portfolio and you must consult your individual investment advisor before taking any decisions. We take a quick break right here on the show. Do stay with us. On the other side, we have our technical and fundamental guests giving you top picks.
Welcome back. Thanks for staying on with us and getting a check on the markets then, and how did we perform this week? Well, not the best of weeks actually for the Nifty over there. As you can see, we're down by about 1%. A very choppy day. We failed to hold on to that 8,800 mark, even though we just touched upon it on Friday. But well, that's the ditto the case for Sensex as well, and the broader markets as well didn't do any better than the benchmarks. But Jay, get in a check on the Nifty then what are the levels that you'll be monitoring for the next week, and do you think we'll be able to conquer the 8,800 mark?
At the higher levels, around 8,900 is a very crucial resistance for Nifty going forward. However, on the downside, 8570 to 8600. These are the levels to watch out for. These are very crucial supports for market.
That's the view on the index right now and some levels to map out. Meantime, let's get in some top recommendations going as well. And Gaurang, run us through what makes your list.
So I've got three names from different sectors. First one is Pharma. Cipla, we've been quite positive on the stock for a long time. The stock has seen accumulation at lower level and has moved closer to 580, 590 from the lows of 460 or 470 or so. Our sense is that on fallback of new launches and a larger market share, numbers should improve significantly. 700 is the target from a long-term point of view. Second one is a private sector bank named ICICI Bank. 360 is the target on ICICI Bank from a long-term point of view. And the last one is the IT sector. A lesser known sector right now, nobody wants to touch it. We are quite optimistic of a turnaround. And if you go by the statement and the commentary that Mr. Vishal Sikka made just a couple of days back on the outlook of earnings, then they are quite optimistic, and the downside is protected by the steps that the management is taken in terms of strategy changes. We believe that, and of course they are optimistic that the second quarter is going to be more promising compared to what they delivered in terms of first quarter. We have a target of 1250, and in case of the second quarter earnings visibility is far better than what our estimates are, we would definitely revise the target upwards. All these are long-term investment ideas and not from a short-term point of view.
Okay, those are some wealth creation ideas coming in then. Cipla, ICICI Bank and Infosys are all three buy calls from Gaurang. But Jay, get in some top picks from you on what looks good on the technicals.
Sure. Well, keeping this kind of a range-bound market in mind, I've got three stocks on the long side, keeping in the medium-term view. Would be a buy call on Zuari Agro, wherein I've seen a good symmetrical triangle pattern that's been formed on a daily as well as the weekly charts. The momentum indicators have clearly reversed from sell to buy both on the daily and the monthly degree. The stock is well above short-term moving averages. I think the probability of a breakout from this range or a triangle pattern on the upside is quite high, and I think the minimum target for this comes to around 210 on the upside. One can stop loss at 170 and buy Zuari Agro. The second buy recommendation is on Axis Cares. Now this is one stock which is like not generally the fundamental analyst would actually look at. We have not seen that kind of a great move coming in this stock in past couple of months now. But however, I think that the way the chart pattern has been formed, the kind of pattern which we have seen on Zuari Agro on the weekly charts, the similar kind of pattern, that is a symmetrical triangle pattern, has been formed on Axis Cares on the monthly degree. Now this has a high relevance, and I think the way it has reversed from the lower end of the range with a buy crossover in its momentum indicators on the weekly and a daily degree, the probability that this stock is likely to inch towards the upper end of the range, that is towards the levels of 260, is quite high. So one can buy Axis Cares. The target is 260 and the stop loss will be 190. The third recommendation is on JBM Auto. Now this stock has clearly given a breakout from a downward sloping channel. Stock has been forming higher tops and higher bottom. The indicators are well into the buy mode. Stock is also trading above short-term moving as well as the medium-term moving averages. Based on all these technical parameters, I think the probability of a wave 5 up on the weekly and the monthly charts is quite high. However, for the short to medium term perspective, one can buy JBMA. Target would be 270 on the upside, whereas the stop loss can be placed at 200. The final call I have is on Apollo Hospital. This is a short-term call. I have a sell recommendation on this because this stock has given a breakdown from a rising wedge pattern, and generally when these kind of patterns are formed and when they give a breakdown, the probability of a downside is quite high. This breakdown in the price is also confirmed by its momentum indicators on the weekly and the daily charts, which have also gone into the sell mode. So I think there's a good risk reward for the short-term traders on the short side. Shorting Apollo Hospital for a target of 1218 and a stop loss will be 1340.
Okay, thanks very much then, gentlemen, for sharing with us all of your top calls as well as giving us views on what our viewers should do. And on that note, we wind it down right here on the show. Thanks so much for watching. We'll catch you same time next week.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.